Hello guys, welcome back to ESENtaxa in this live of today. So today we're going to discuss about the tax reduction strategies in Europe. This is a topic which is quite important. It's quite particular. I wanted to give you some example of how we consult our clients, which are the typical scenarios that we normally investigate. Some of those scenarios are not so evident. Some of those scenarios are basically particular, very, very peculiar. And we here in ESENtaxa, we try to find also a strategies to which basically is across to 2 or more countries in Europe. So, for example, I'm going to show you with some example how we can improve our taxation while we are invoicing from a country and we are fiscal resident in other countries within the European Union, or we are receiving income from a country like a rental income, but we have a tax resident in a country that doesn't tax the rental income. So you see, there are also opportunity to cross-check and combine tax regimes in different countries in Europe. And I'm going to show you exactly a couple of examples, some more examples of what are the unexpected, unfamiliar tax schemes that you can exploit while you're living in Europe among jurisdictions. So basically, this is what we do in ESENtaxa. We try to always find you the best optimization plan, not only in the countries you're going to relocate into, but also exploiting the convention to avoid double taxation between countries, especially if you have multiple income coming from different countries in Europe. But also if those incomes are coming from outside Europe, but your tax residence is one of the European countries. We normally focus first on Italy. In Italy, we have an extensive amount of videos. We have a long experience on Italy. We go through each and every details of each and every tax law published in the latest years, and we are explaining in English the most important tax regimes that are present in this country. We are doing the same also for other 2 jurisdictions, which is Belgium and Portugal. And we are moving to other jurisdictions. So if you like this kind of topics, if you like ESENtaxa, the way we discuss, the way we explain you these tax topics, these tax regimes, we always recommend to subscribe the channel, because we're going to release also news about new jurisdictions, and we are going to explain with the same level of details the taxation on these new jurisdictions. So stay tuned. You're going to have a lot of surprises, a lot of tax benefit that you can exploit through Europe. Now, of course, at the end of this live, if there is somebody who wants to ask questions, you're welcome, guys. I will reply you at the end of the live after my speech, my talk. So the first example that I wanted to show you is how to combine the NHR Portugal tax scheme with the Forfeit Regime in Italy, which is something like, how can it be possible? I mean, combine 2 tax schemes in 2 different countries, while as a taxpayer, I have to be tax resident only in one of those countries. Well, there is the chance. Actually, this is one scenario. It's a very particular scenario. It's it's called the Schumacher ruling. It's not Schumacher the pilot. Schumacher ruling, which is the European law. So basically, it's in common for 27 countries in Europe. And basically, this tax law is telling you that if you're not tax resident in Italy, you can still apply for the forfeit regime. The only constraint is that you have to reside as a tax resident in one of the 27 European countries, and your global income, your worldwide income, should not pass 25%, because the 75% of this income has to be produced in Italy. I will rephrase it. Maybe it will be a little bit more easy to understand. So if your income is coming from 75% from Italy, because your clients are there, you're selling product to Italy, or you're giving consultancies to Italy, you can apply for the forfeit regime, even though you're not tax resident in Italy. This is quite important, which means that you can potentially live in Portugal, apply for the NHR. So Portugal excludes from taxes everything that comes from Italy. Okay, so you are a tax resident in Portugal. Portugal, with the NHR program, excludes from taxes your foreign income, and your foreign income is coming from Italy, and this foreign income is 75% at least of your worldwide income. Then you can apply the forfeit regime, so pay only 5% taxes on your professional activity, up to the threshold of 85,000 euro in 2023. So if you know what's the forfeit regime, you know what I'm talking about. If you don't, in the description below the video, I will put at the end of this live the link to the video in which we explain you how the forfeit regime works in Italy. So this is one of the particular thing that nobody thought about it. So it's possible to apply for the forfeit regime even though you're not Italian taxpayer, and you can exploit the NHR benefit and the forfeit regime at the same time. So this is one example. Still with the NHR, you can combine income from another country, which is tax-free, and I'm talking about, in this case, with Belgium. We are going to release in this ESENtaxa channel more videos about Belgium. And in Belgium, there is a very favorable taxation on real estate. So if you purchase a property in Belgium, a residential property, you put it under rent. And if all those apartments, houses under rent, don't have a cadastral value, which is the value that the state assigned to the home, is not the real purchase value. It's a very, very low value. So if this value doesn't pass 2,500 euro in total, basically, as a not fiscal resident, as a not taxpayer in Belgium, these incomes are tax-free. Okay? So if you invest in real estate in Belgium, you have potentially, as a non-resident, you have potentially tax-free rental income. And how is the best way to combine this kind of income? Of course, still with the Portuguese NHR. Still, NHR excludes from taxes the foreign income. If you don't know what this NHR is, because I imagine that you who is following this live normally is one of our followers that basically knows exactly what I'm talking about. But if you don't know what is NHR, in the description below this video, I will put also the link to our explanation to the NHR program in Portugal. So again, NHR excludes from taxes foreign income. Your foreign income is coming from Belgium, but Belgium doesn't tax because you're not living in Belgium and you're not taxpayer in Belgium. So you can see you are combining the benefit of non-resident tax regime in Belgium plus the NHR in Portugal. Another example, this is for high net worth individual. Classical example is to exploit the high net worth individual tax regime in Italy for new residents. This is a different regime, which basically allows you to exclude from taxes all your worldwide income, all your foreign worldwide income, except the territorial Italian income produced in Italy. So if you're a millionaire, why I'm saying that you have to be a high net worth individual? Because when you move to Italy, Italy requires you to pay a substitutive taxation, a fixed amount of money, once per year, of course, of 100,000 euro. So if for you, 100,000 euro, it's a very small amount to pay, compare your global foreign income, then Italy makes sense. Because basically, if you, let's say, you're earning 10 million euro, your global foreign income, and you move to Italy with this tax regime, you pay only 100,000 to the Italian state, which means that you're only paying 1% taxes, okay? So you apply this regime in Italy, and you can basically have everything, all the income from abroad, not taxed at an ordinary tax rate. So basically, paying this 100,000 euro, everything coming from abroad is not impossible. You don't have to declare anything. You have a bank account abroad. The Italian state doesn't want to know about it. You have a company abroad. The Italian state doesn't want to know about it, etc., etc., etc. You have also assets abroad, like property, rental income, everything. So everything that is coming from abroad, from Europe, from outside Europe, at least, of course, each country has to have an agreement with Italy, like the Convention about the double taxation. But Italy signed this convention with all the countries all around the world, so no problem about it. So I was saying that if your income is growing from abroad, you always pay 100,000 euro. And this is very comfortable for those entrepreneurs who wants to run a business in a foreign country. Okay, so maybe they have an LLC, a pass-through company, so their income is coming from US, from Canada, from other countries. this income flows to your bank account as a physical person, and you always pay this 100,000 euro, regardless your foreign income. Okay. The only problem with this regime is that you cannot work in Italy, or you can do it, of course, but if you do, you will see your income tax at an ordinary rate. So this is another way to combine the high net worth individual flat tax in Italy with any kind of jurisdiction in Europe and outside Europe, to run a business outside Italy without paying taxes in this country, or just 100,000 euro, which is a small amount of money if you are a high net worth individual. Okay. What else? So these are one of the examples that normally we can give to our clients. There are also other principles that a lot of clients are not aware of in Europe, but all this is also all over the world. But especially in Europe, between countries exists this convention to avoid the double taxations. These conventions are very important because they allow you to understand how to avoid paying taxes twice. Okay, so if you're a tax resident in a country and then you're tax resident in another country, from which you are perceiving income, you cannot be taxed twice, because those conventions are telling you that you have to be tax resident in only one country. So once we determine your fiscal residency, one of these two income are coming from the country where you want to be, when the country wants you to pay taxes on the territory, and the other country where you're living wants you to pay taxes on the worldwide income, then you have this clash, and the convention avoids resolve the situation. Now, how they resolve the situations, this convention, with two methods. One is the tax credit method, and one is the exemption method. I have a talk about this topic in one of the videos here in ESENtaxa, so don't worry if you didn't understand exactly what I said. But if you watch the video, I will explain you more in details how this convention works. In general, the conventions works. What's the principle behind, and how you can exploit the conventions to avoid the double taxation to pay less taxes, or to understand in Europe where it makes more sense to purchase a property and receive a rental income because the taxation doesn't bite your income, doesn't reduce your income. Where to make your investments, where it's more convenient in terms of taxation, receive royalties, etc., etc., etc. So the exemption method versus the tax credit method are the most used through Europe. And those are the, let's say, most common tax strategies that we can exploit in Europe. And we can consult our client, and we can basically plan a relocation to a certain country, considering also the worldwide income. So all the incomes that are coming from abroad, we are analyzing them. We provide tax simulation, and we can tell to our client in advance if a certain relocation in a certain country makes sense or not. Okay, or even let's say even if the client wants to go in that country for any reason, so we can also help him to reduce the tax burden as much as possible. So we provide this service through consultations and through tax simulations. These are the most requested services that normally the clients are requesting. And we also have an extensive network of accountants in Italy, in Portugal, in Belgium. And soon we also release videos in new jurisdiction, and we will also have partners in those jurisdictions. So just have to stay tuned in ESENtaxa to understand how and where is more convenient your tax resident, and where is more convenient your business. I think I said enough for today. I said quite a lot of things, just to give you a glimpse of what we do here in ESENtaxa in our consultancies. If there is nobody now for questions times, I think we can close this stream. After the stream, I will give you informations about the concept that I've just mentioned in this video. So the NHR, the Forfeit Regime, the double taxation method, the high net worth individual tax regime in Italy. So you will have all these concepts well explained in our channel. So I will put all this information in the description below this video. I have one question today. Okay, I am a software developer. This question is coming from Bupinder. I don't know if I'm pronouncing well your name. I'm a software developer with 3 years of experience who is living in Spain, and I don't have a university degree. Can I apply for the Intermediate regime? Yes, there is another requirements in case you don't have the degree, and as long as you are a European Union citizen. So as a European Union citizen, there is the possibility to apply for the Intermediate regime even though you don't have a degree, but there are other requirements that are basically there are requests from the Italian tax agency. And yes, this also works as a freelancer, or alternatively as an employee. Okay. If there are no other questions, I think we can close this stream. And so again, if you like this content, if you want to know more about this kind of strategies in Europe, just stay tuned, subscribe to the channel, like a button please, and notification bell to be always updated whenever we release new videos or just some live like this one. Thank you. See you in the next time.